Weekly fair value gap, bearish, 7350 to 7400. Formed on the weekly displacement candle off ATH. Current price is trading directly into this zone. Partially tested, not fully mitigated. Valid supply. Premium. Highest probability distribution zone for short entries on retrace. Daily fair value gap, bullish, number 1, 7280 to 7350. First bullish daily fair value gap formed during the explosive May rally leg. Untested, valid demand. Discount relative to ATH. Magnetic draw for price on this correction. Daily fair value gap number 2, 7220 to 7280. Second stacked daily fair value gap below number 1. Represents deeper imbalance from the same rally leg. Valid demand. Discount. Secondary draw target if number 1 is consumed. Daily fair value gap number 3, 7150 to 7220. Lowest fair value gap in the stacked daily cluster. Origin of the first BOS on the daily chart after the April Chach. Valid demand. Deep discount. Tertiary target or institutional accumulation zone. 4H Chach level, 7510 to 7520. The 4H Chach printed on June 5. This structural shift is now the key supply ceiling on the 4H. Resistance/supply. Any 4H retrace into this level is a distribution opportunity. 4H fair value gap, bearish, 7557 to 1600. Formed during the 4H displacement candle south off the ATH. Partially overlaps with weekly fair value gap. Valid supply, premium. Confluence with weekly fair value gap makes this the highest density supply zone on the board. Weekly fair value gap, lower, from 2024 base. The deep macro weekly fair value gap visible on the left side of the weekly chart, extreme discount. Not relevant for current swing structure, but marks the absolute institutional floor if macro thesis reverses.
High-density BSL clusters, 7640 to 7660, ATH region. Breakout entry cluster. Every retail long that entered on the ATH breakout has stops above this level. Partially swept on the current distribution wick. Remaining stops sit as the final BSL above the all-time high print. 7600, prior swing high or equal highs. Daily session high confluence. Trendline breakout entries from the June rally cluster here. This level has already been swept. Confirms the manipulation complete. Medium density BSL clusters. 7510 to 7520, 4H CHOCH origin. Breakout traders who entered the BOS sequence from May would trail stops to this level. Now acts as supply ceiling. 7460 to 7480. Daily fib 0.618 to 0.705. Fibonacci extension entries and trailing stop clusters from swing longs initiated in May. High-density SSL clusters. 7200 to 7250. Daily FVG stack, primary target. Equal lows printed during the consolidation within the May rally. Swing trader stops and breakout failure entries stacked below this zone. Highest density SSL on the daily. 7140 to 7150. Daily fib 0.382 on weekly/BOS origin. Weekly chart 0.382 retrace level and origin of the first daily BOS from April. Swing trader stops from early bulls cluster here. Medium density SSL clusters. 6840, weekly fib 0.618. Only relevant if 7200 is taken cleanly. Longer term position trader stops from Q1 2026 entries. 6626, weekly fib 0.786. Macro invalidation level would represent a near full retrace of the post-capitulation rally. This is the weekly FVG lower boundary, institutional floor for the entire rally structure. Primary scenario, bearish continuation into daily FVG stack. Price has swept BSL above 7,600 ATH and printed a clean 4H KCH at about 7,515 and displaced violently to 7,368 on June 5-6. The weekly close currently sits directly into the weekly FVG, 7350-7400, which is the most natural distribution zone for institutions to re-offer supply. Monday open sequence. Price is expected to exhibit a brief Asia consolidation within 7350-7420, followed by a London session manipulation spike back into the 4H FVG/weekly FVG confluence, 7557-7600. This is the Judas swing. Smart money will use any retrace into 7520-7560 to distribute remaining inventory. The New York AM kill zone then delivers the true expansion move south, targeting the daily FVG stack at 7,200 to 7,280 as the primary draw. The stacked nature of the three daily FVGs, 7150, 7350, creates a magnetic confluence zone. Institutions need to mitigate these imbalances before any legitimate continuation of the macro bull leg toward ATH and beyond.
Trigger condition. 1H or 4H candle retrace into 7520 to 7560, 4H FVG or CHOCH region, followed by a bearish displacement candle closing below 7480 on the 1H chart, confirming rejection of supply and resumption of the distribution leg. Entry on the first 15M BOS to the downside post-displacement. Invalidation. 7600 reclaimed with a 4H displacement candle close above. If price breaks and closes a 4H candle above 7600, the CHOCH is negated, the weekly FVG is consumed bullishly, and the distribution thesis is void. Bias reverts to bullish continuation, targeting new ATH above 7660.